Today we are joined by Shameela Soobramoney, the Chief Sustainability Officer of the Johannesburg Stock Exchange, to explore the green financing initiatives they have in place and the difference they will make. Simply put, green financing is an investment or loan which supports environmentally friendly activity, for example, building environmentally friendly infrastructure. Due to this, green financing plays an important role in fighting against climate change and achieving net zero. So Shameela, could you briefly explain green financing and what it has to do with sustainability?
So, green financing really is, in the simplest terms, the financing of activities and assets that are directly aligned with positive environmental outcome, with a low carbon economy. So it's those instruments that we have and that we can use to direct financing towards those outcomes, ideally. And of course, there's array of different instruments that can be deployed in the capital markets to do this. And there's of course an explicit need for these particular instruments now, as we've realized, the imperatives of sustainable development and the critical role that markets can play.
What are the main issues facing green financing right now, and do they adversely impact society as a whole?
So the main issues I think facing green financing, firstly, is that it's probably just too little. As if you look at it relative to the whole in terms of financing. The other issue I think that it is facing is a definitional one. Green unfortunately does not have a uniform kind of a definition across jurisdictions. Taxonomies, which is really a catalogue of what is green, that helps as a reference point. So that certainly helps. And there are also interjurisdictional issues as to what is required in terms of the activities that will need to be undertaken to achieve a low carbon economy going to the future and decarbonizing those economies, as an example. So those are some of the challenges. Understanding of that, the work, right, at a practitioner level to develop an instrument that will qualify, for example, as a green bond. There are a number of entities who will say that they're lacking in terms of the expertise or the skills within their organizations to do that. So those, I think, are some of the immediate challenges. The other one is and is a related challenge, which is around the concerns around greenwashing, right? If something is labeled as green or ESG, is there clarity as to what it is actually enabling? And that again is linked to some of the definitional issues that I mentioned earlier. So those, I think, are perhaps the main ones we have now, alongside just the general public awareness about these instruments.
Could you please describe the different bonds within your sustainability segment and what they can offer investors?
So the different bonds include green bonds, social bonds, and sustainability bonds, and where sustainability bonds are a combination of green and social, and I'll get into some of those descriptions just now. So they really are the combination of where you might be looking at things that have social impact as well as an environmental impact. Just to recap quickly, that bonds are fixed income instruments, right? And your borrowers are usually governments or large corporations in the context of a listed bond. And they do this in order to gain access to capital, which is to fund operations, investments, and projects. The bond specifies its maturity date, so that's the date on which bondholders will be repaid the principal of the loan, because effectively your bondholders are lending you money. And it will also specify the interest rate that's going to be paid. So how much is going to be paid back, to compensate them for having lent you that money. And once issued, most bonds are traded. So in terms of the JSE's regulations on the sustainability segment, green bonds are specifically designed to raise money for environmental or climate-related projects. Social bonds are specifically designated to raise capital for socially responsible initiatives, or have social impact type initiatives. If you think about employment creation, building low cost housing, contributing to education, those would be the types of things that would qualify under a social bond umbrella. They need to meet certain criteria, of course, and the guidelines for those criteria will be set out in things like the social bond principles, and then for sustainability bonds, also the sustainability bonds guidelines, which are governed by the International Capital Market Association. You could use other standards that that the JSE would need to look at whether it's acceptable, and you would need to prove why you're choosing to use that particular standard. And then sustainability bonds are specifically designed to raise money for, like I said, a combination of activities that follow both the environmental and social objectives.
So regarding net zero by 2050, is there a role that the Johannesburg Stock Exchange is playing in order to support net zero by 2050?
In relation to the support of net zero by 2050, our approach is effectively two-pronged. The first one is that what can we do to enable the market? There are a number of companies listed on the JSE, and collectively there's a huge opportunity there to support that. And so the first thing there, I think, is in relation to what I've already mentioned around our transition segment and our sustainability-linked bonds and our green bonds. And so these are aiming to finance the outcomes that are supportive of a pathway to net zero. So that's using the market and creating instruments deliberately to be able to help finance that and attract capital that might be needed for that. In addition to that, we have a partnership with FTSE Russell, and so we have data, ESG ratings, for example, on listed companies. This data could easily be disaggregated by an investor and for example, who's focused on just carbon emissions and looking at pathways to net zero, and be able to start using that and factoring that into investment decision making. So that's a tool that we have there as well. The other one, of course, is our disclosure guidance. We've spoken about the disclosure guidance earlier, and we have both the sustainability disclosure guidance, which has elements of climate change and, for example, emissions disclosures within that, and then there's the climate change disclosure guidance itself. Now, the climate change disclosure guidance obviously goes into a lot more detail to assist companies to understand that, and it sets out that framework under the TCFD, which is the Task Force for Climate-Related Financial Disclosure, and that's really pretty much considered now to be the global standard for climate disclosure. So giving our companies the support on that, given a guidance document that is very resource rich and allows them to have multiple references to different sources of information, makes that access to that information a lot easier for them, and hopefully helps them to start setting the pathway and the foundations within their organizations to begin reporting on that. And of course, the idea behind the reporting is that they will also start taking the actions that are required in that regard. And then the second facet is that of the JSE Limited itself, who is a listed company. So we joined the Net Zero Service Providers Alliance under the Glasgow Financial Alliance for Net Zero, commonly known as the GFANZ, and that's to promote and champion sustainability measures within our own country, and of course look at ourselves and internationally. And we've so then through that committed to supporting net zero by 2050, and that is within the context of our own country's nationally determined contributions, of course, and that common but differentiated responsibility. So those are the efforts that we're making overall, both that's market facing as well as internally, to try to align to a net zero goal.
I guess I want to move on to then like the South African stock market as a whole, and so I guess how has the South African stock market conformed to the green financing initiatives that have been implemented by the Johannesburg Stock Exchange?
So yes, it's an interesting one, I think, because it's difficult to assess how they've responded. We certainly can look at that firstly from a quantitative metric and look at how much capital has been raised so far on our sustainability segment. So that's been in excess of $1 billion as it stands now. Obviously, in contrast to the fuller bond market, it's a small amount of money, but the fact is that it has been growing, and the sustainability segment has actually been our most successful part of the bond market year on year if you looked at 20 versus 2021. So any growth in the bond market actually came from that segment, which I think is a very interesting indication. The other thing that has been, I think, for us quite valuable is to see the amount of interest and demand from investors. So in our green bonds, for example, every single issuance has been between 3 and 5 times oversubscribed, which is a clear indication of demand for such instruments. So we're certainly seeing very positive indication of interest in the market at this point in time, but also you can see now from a bit of track record we've built up, I think, very positive uptake in there, and we're hoping that that is only going to grow going to the future as we are certainly seeing more and more demand for these kinds of instruments coming to market.
Perhaps we should discuss also the future of green financing and what else can be done within the finance industry in order to achieve net zero by 2050.
Certainly, I think number one is education. There's a lot of education that can certainly help. So there's always going to be a need for advocacy, engagement, education in this market. And the financial sector, I think, can do a lot more in that regard of understanding what it is that needs to be financed, what role they can play. In some instances, many of the projects that need financing are not immediately bankable and will require, for example, the blending of financing. We talk about blended finance. but finding those models that bring together the different types of capital, the different tiers of financing in a way that supports those kinds of projects that are critically needed but might not be immediately bankable, because the fact is that bankable things will attract the finance anyway. And so how do we look at that tier of things that might not be immediately bankable and use the might of, the financial markets and those really clever guys that can structure great deals out there to bring that together to say, this is a societal imperative, right? If we don't achieve, for example, the aims of the Paris Agreement, we know what pathway we're setting ourselves on to climate change. And so how can we bring the markets to bear? That's the certain one there. So there's advocacy, there's engagement required, there's a lot of financial innovation that I think there's an opportunity for as well. And so the markets can definitely come to bear in that regard. So innovative financial instruments, platforms that are maybe different and new, that can allow for different sorts of financing that might be needed outside of your traditional structures, which might have their own impediments and bring their own kind of barriers in a way. I think those are the things we need to have. Education, like I said, more clarity sometimes on definitions. As we're seeing different taxonomies, for example, develop globally, I think there's an opportunity for creating more interoperability, because, as you have nuanced differences between jurisdictions, that can create fragmentation in the market. And so the opportunity to have a more interoperability that allows for things to come together. And, sometimes you might find that there's a really big thing that needs to be done that's for a global good, that requires those barriers to be broken down, for example. So I think those are some of the things at the biggest scale that can be done. And an explicit acknowledgement that financing needs to have it needs to have some environmental objectives as well, right? What is it that you're financing? That, I think, is maybe at a little bit more mature stage, as we're starting to see disclosures happening, via banks and their portfolio emissions, and the pressure that's coming to bear, even from shareholder activists that are asking, what are you financing and what does that mean, and what is your actual trajectory towards net zero? So those are things that are positives, I think, that we're starting to see, and there's huge opportunity for financing to be innovative. And for education to happen also to those looking to raise finance, to say there are instruments available. This is what you can do, and perhaps maybe remove some of those mental barriers to say, oh, this looks like a step too far from a normal bond. How am I going to do this? Is this going to cost me a lot of money? So those things are perception barriers, and where those are real barriers, for example, where maybe the regimes that are put in place to look at these things are costing too much for an issuer perspective. There's opportunity there for an ecosystem to work together to bring down a cost, for example, while not sacrificing credibility. I think those are some of the big opportunities for finance going forward.
Are there any future projects that the Johannesburg Stock Exchange are currently working on, and is there anything else you'd like to add about green financing?
So in terms of projects, I think right now the big thing for us is to roll out the disclosure guidance, which was issued in June, and to start working with companies to understand how they're applying that, and where there are opportunities for us to assist further in that regard. Also the collection of data, for example, around that, and to see what sort of uptake we might be seeing in that regard. The other big ones, of course, would be to work together at a national level and an international level, where the real big drivers for sustainable financing are happening. Ultimately a market also exists within the context of the country within which it operates, and also with the international pressures that are coming to bear on, for example, the companies that are listed on that market. And so the need to be able to make sure we're engaging globally, understanding what's happening, how that might impact our market, how we need to maybe influence those discussions is the first level. The second level is certainly a national conversation, and to be able to say, well, what is the right pathway for our country? Where do we need to go? What is the vision that we need to enable through financing? And so there's a bigger objective that we need to see ourselves supporting as well. I think that those are the areas that we will certainly be applying our minds to. And then, of course, a level below that is saying, as a consequence of that, then what are the instruments that we can enable on our market? And how can we create a more enabling environment for those better practices in sustainability to grow and to thrive? For us, there's also that level below even the instruments to suggest what needs financing, right? And what is the vision for the country, and what other ways can we assist with that? And so there could be different elements that we can use our opportunity as a connector, because a JSE or a market in any way is a connector. It brings together buyers and sellers, it brings together different elements of the financial ecosystem. And so where's that opportunity for us to leverage that to be able to advance the aims of sustainable development and certainly, that future as a low carbon economy. A big conversation in a country like ours is, of course, the just transition. And it's the just element of the transition that I think every entity is going to have to play its part in being able to understand and being able to enable. And if you think about it, in a country like South Africa, with huge amounts of inequality, a lot of unemployment. I mean, we're sitting at about 40% unemployment right now, going up into the 70 or 80% if you consider the youth population as a subset. Those are very big concerns for a country like ours. So whilst the environmental objectives, for example, of decarbonization are certainly important, and we're sitting on a continent that already is modeled to experience much higher than whatever average the global temperature rise there is, there's no doubt that that's an imperative. But decarbonizing your economy in a way that also enables a just transition socially is important. And so that's not going to be an easy thing to achieve. You have to consider what happens when you start decommissioning coal-fired power stations, what happens to the jobs that are tied into that value chain, and what are you going to be able to do to enable, upskilling, reskilling, new industries that way you can absorb, and increase employment, for example. So there's a massive conversation to be had across the economy, and I think the JSE, is going to be a critical player in that as a cog in the wheel to help with the financing of those things and understanding how the markets need to play a part, but also how we need to feed into a more international conversation on these issues that understands these kinds of circumstances. So I think there's a number of things that we will be occupied with in the near future.